Now, even though I talk about the NEOS S&P 500 high income ETF SPYI quite a bit, because honestly, in my opinion, this is the #1 best high income ETF across the entire market, all things considered. Now, I say that because in my eyes, the S&P 500 is the best index to have exposure to in your long-term portfolio. But this ETF offers that exposure through a high income strategy that has been very consistent as far as distributions go. The ETF has not decayed whatsoever since inception, and also pays out income very tax efficiently in the form of return of capital. But in this video, I want to dig into SPYI even deeper and share with you guys some of the ins and outs of this ETF that you might not already know. So if you're a dividend focused investor and you like high income generation, definitely stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now I came across this article on SeekingAlpha.com. It's from Skeptical12. It says SPYI recent performance shows why this ETF is becoming the gold standard. And as you guys know, I love SPYI, so I had to make a video about it and go through it with you. The summary says SPYI's innovative cover call strategy consistently outperforms peers by capturing more S&P 500 upside while maintaining similar downside risks. The fund's approach selling out of the money calls and selectively buying calls delivers solid income and total returns even during volatile markets. SPYI maintains stable monthly distributions through recent market sell-offs, proving its resilience and commitment to consistent payouts. Despite only 3 years of data, which isn't that long, but still a good amount of data, SPYI's strong performance and adaptive management justifies my continued strong buy rating. They then said often adversity shows much more about the flaws in an investment than the performance of that fund or company during good times reveals. When the market is doing well, a lot of financial options look impressive, but sell-offs and periods of heightened volatility can quickly tell you what weaknesses are rapidly apparent. Cover call funds have become some of the most common income-based choices that investors seeking consistent, substantive payouts are allocating capital to. I can definitely agree with that. Over time, I have been focused more and more on these type of investment vehicles and others. It says these option-based investments used mostly simplistic and often disappointing strategies in past years, but some newly developed cover call funds have taken a different approach that is proving to be much more effective in various different market conditions. One of the most successful cover call funds that was developed more recently is the NEOS S&P 500 ETF or SPYI. This investment has been around since August of 2022. SPYI has offered investor total returns of 48.74% over the last 3 years, while the SPY has offered investors around 66.98% during the same time period. The NEOS fund also has consistently outperformed most of the ETF's peers such as SCHD and others like JPIE. So over the past several years, has SPYI outperformed the underlying S&P 500 itself? It has not outperformed it, but it's stuck with it pretty closely, and all along while has outperformed most other S&P 500 high income ETFs across the entire landscape. It then says SPYI's strategy of selling out of the money calls and using part of the premium to selectively purchase out of the money calls has enabled this ETF to consistently capture more upside of the underlying S&P 500 index. The fund tracks without exposing investors to more downside risks than the peers like SCHD or JPIE. The fund should continue to be able to offer investors both solid income and total returns in more adverse market conditions. The NEOS S&P 500 High Income ETF Exchange Traded Fund has an expense ratio of 0.68%, $4.63 billion in assets under management, and a trailing yield of around 12%. SPYI's strategy is to sell index call options that are nearly 1 to 3%, and the fund is also sometimes buying out of the money calls with the income received from those contracts sold. SPYI uses a database approach, and the fund does not always sell options against all the investment holdings. The ETF has generally sought to distribute around 1% of net asset value per month since the inception of the ETF. Now, as a side note, if this ETF were to be able to distribute 1% of net asset value per month, that would mean that it would take around 100 months for you to have your entire investment paid back. It then says SPYI has primarily outperformed JPIE and QYLD for different reasons. The ETF has done better than QYLD because the Global X investment rigid strategy of selling monthly index call options against the entire portfolio that are at the money has prevented the fund from capturing much of the upside. Now, this is something I talk a lot about because I'm constantly talking about different covered call option style ETFs across the market. A lot of people have asked me in the past, why in the world do you buy into so many different names that might have the same underline, say the S&P 500 or the NASDAQ 100? And I constantly say the same exact thing. It's simply because even if the underline is the same, these different fund providers have different strategies and objectives and different option strategies. So you cannot look at all the ETFs exactly the same, even if they all are, let's say, option income ETFs that all utilize the S&P 500, for example. It then says, well, the S&P 500 has outperformed SPYI by nearly 20% over the last 3 years. The NEOS fund has underperformed the index by just 2.5% since August of last year. SPYI both held up well and was able to capture most of the upside of the broader S&P index during the repeated sell-offs and the extended period of heightened volatility back in March and April of this year. The fund was able to continue to pay a consistent income stream even though there was much more challenging market conditions. Now, this writer did mention earlier that you really get to know what your holdings are during market sell-offs, during volatility. When everything's going good in the market, everyone seems like a genius. This fund's doing amazing, that stock's doing amazing, but during market sell-offs, you really are going to see which names are going to survive and which names are going to crumble. It then said SPYI's payouts have ranged from 46 cents a share per month to 55 cents per share per month over the last 2 years. I always consider SPYI as a fund that pays around 50 cents per share per month. All in all, in a current market landscape where there are so many different funds to choose from, so many different high income ETFs that all might even offer exposure to the same underlying index, SPYI as a whole has been one of the top ETFs that's been a great fixture in my long-term portfolio and hopefully will continue to do so in the future. So now that we talked even more about SPYI, the NEOS S&P 500 high income ETF, and why this ETF might moving forward be looked upon as the gold standard of all high income ETFs, I'd lastly most importantly have a question for you guys down below. When it comes to high income ETFs, whether it's this one or not, what are some of your favorites across the entire market? Drop the ticker symbols in my comments down below. If you guys enjoyed this one, make sure to drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.